Good evening, everybody. I know I'm probably stealing you all away from the Steelers game. All right. Somebody had requested a while back if we could do a session on when to take profits. And so that uh, uh, that is more beneficially illustrated when you knowing what the candlestick signals are telling you, especially in overbought or oversold areas. So I always kind of start this out with a lot of people are taught what indicators tell you when it's time to buy, but they don't tell you when it's time to sell. So one of our biggest fear is taking profits. And that's because normal human nature, and I say normal human nature, I know there's a lot of people out there that were just like me. I hated to take profits because what if I closed out a profitable trade and then it skyrocketed without me? Boy, would I look stupid. And what causes that fear of closing a position? Because we're always worried about something like this, where we close it out, and all of a sudden the next day it goes up without us. Fortunately, with candlestick analysis, we know when to close out a position based upon the probabilities going against us, a close below the T line. We can't always trade on the basis that we're hoping for something like this. However, we know that if we close out this trade and it's starting to trade like this, now at least we have a format of what to do next. If this is a kicker signal, yeah, we can always start buying back. So I'd rather be late to the party, but knowing I'm in the right direction, versus hanging on to something that might be heading in this direction with that same magnitude. So when we know what the candlestick signals are illustrating for us, that allows us to create our own natural disciplines. So the same as knowing when to buy, it's also knowing what the sell signals are. All right, so here's a couple of the simple illustrations to tell us when it's time to take profits. When you move too far away from the T line, again, that's a visual analysis to say when we're way up here, what do we know about human nature? Or what do we know more about the T line? That it's a natural support and resistance level of human nature, with one of the truisms being that the further away you move from the T line, the higher the probability it's going to come back and test it. So we have a very simple process when something's trading up here all the way that far away from the T line. We flip to our 10-minute chart. Now, that was very evident, I think it was back in February, when Tesla stayed above the T line. Again, here's the T line rule. It doesn't have to trade greatly, but as long as it stays above the T line, there's one basic assumption: that we're in an uptrend. Now, the Japanese rice traders always kind of visually profess where do most people buy. They buy exuberantly at the top. So we had people in the options room that made very huge profits off of Tesla, because look what was happening right here. You can see the evidence or the exuberance starting to come in. Then they gapped it up, and it just started running like a scalded dog. But look what it was doing when it was here. Look how far away you are from the T-line. So what keeps you from losing all that profitability of getting out way down here? Again, you flip to your 10-minute chart. Why do you flip to your 10-minute chart? Because on the daily chart, you can already analyze you're way too far away from the T-line. Human nature is probably going to start taking profits. We can use a visual analysis of the T-line on the 10-minute chart to become a much faster area to start taking profits. That's when the price moves too far away from the T-line. We also have evidence that if you're trading along the T-line, when do you want to take profits? When you see a sell signal and a close back below the T-line. One very easy probability factor to remember, that if you see a candlestick sell signal and a close below the T-line, the probabilities have now gone dramatically in favor of a downtrend versus the uptrend continuing. What's the worst case scenario? You close out the position. Next day they open positive, start trading positive. Now you can evaluate whether it's time to get back in or whether you want to go on to something else. Sally, if you're having that problem, a lot of people that have Yahoo aren't getting information because Yahoo and a couple other service providers have become very stringent on what emails get through. They do their own filtering process. So if you're having problems getting information, email Abraham and see if there's an alternative way. Maybe you have another server you can receive it through, or yeah, he'll figure out an alternative. Can you use the T-line on weekly charts? Yes. This chart right here could be a 5-minute chart, a 1-minute chart, a daily chart, an hourly chart. They look exactly the same. Remember, the graphics, the candlesticks are the graphic depiction of what's going on in investor sentiment during a specific time frame. It works on all time frames. So if I see something like this, got scary there, but didn't close below the T-line. Hanging man, and then a gap down and close below the T-line, that told me there is a change of investor sentiment. Works just as well on a 10-minute chart. If you're in a downtrend, what's happening on your 10-minute chart? If you're way in the oversold area, and you start seeing this wave on the daily chart way away from the T-line, you can start seeing or knowing when to start taking profits on the short side. I don't know, is this? That may have been the 5-minute chart, and this was the 10-minute chart. If we see at the T-line, what are we looking for? We're looking for that identifying when there's a change of investor sentiment. And what creates that change of investor sentiment visually? We start seeing indecision up here. Hanging man, doji, shooting star, doji, bearish engulfing in the overbought area. When you start seeing 3, 4, 5, 6 sell signals, even though it hasn't closed below the T-line, by this time over here, if we saw this, what should our assumption be? They're still in an uptrend. They're going to take it out to new territory after negating these sell signals. And then when you saw this candle, even though it didn't close below the T line, what can you start assuming? The bears are taking control up here, even though they haven't closed it below the T line. All right, good, WB. So this should be more of an analysis of where are the probabilities starting to change. Same thing on the downtrend. There's a bullish harami. What's it telling us? That maybe our probabilities are starting to change. If I had shorted this and stayed short all this time, when I saw the bullish harami in the oversold area, I might close out half the position, because where am I? I'm way at the bottom of a long downtrend. Stochastics in the oversold area, and I'm seeing a buy signal, even though it hasn't confirmed by closing above the T line. Take off half the position. Worst case scenario, if it continues lower, you're still making money in a much higher risk area. But the probabilities are starting to show that things are changing. So that's what the visuals do. Visual analysis allows us to assess what the probabilities are doing. So if we see sell signals at a level that everybody else is watching, even though we're not closing below the T line, what's it telling us? This is an area where they're starting to sell, even though we haven't closed below the T line, which is our ultimate criteria. At least we can see the probabilities are changing on a kind of a bearish flutter kicker signal at the 200. I'm closing out the position. What's my next analysis? Seeing if they're going to come back to the T line in the 50 and start back up, then I can always start buying back. So when you know what the candlesticks are telling us, it gives us much more clarity as far as observing when things are selling. If we can see what everybody else is watching, an upward resistance level, and we see that it hit that and started selling off, we're closing out the position. Because where do you think the next likely target's going to be? Back to the T line, back to the T line, back to the T line. What's our next trade? If they bounce it back up, we can always start buying back in. Observe the obvious. If you started seeing selling, they took it back up. Here's a very strong indication that the bulls are running out of steam. If they can't close back up above the previous high and you get another sell signal, that means the bears have taken control. Even though it hasn't closed below the T line, kind of gapped down, doing a mini bearish kicker signal, you want to start closing out the position, because what did this level tell us? They weren't going through. The stochastics were starting to roll over. Let's go get out of this position. Let's go find something that looks more like this, where the probabilities are much greater in our favor. If I start seeing sell signals up here in the overbought condition, kind of your evening star type signal, I'm closing out the position, even though it hasn't closed below the T line yet. Because where can I buy back knowing the probabilities are the J-hook pattern is working? Back up through this level. All right, maybe I give up a little bit of profitability, but I'd rather give up profitability than profits. I want to know that every time I'm buying, the probabilities are in my favor that we're going in the right direction. I also want to be able to identify where those probabilities are starting to change when I can see an obvious resistance level, starting seeing sell signals. I don't have to necessarily wait for it to close below the T line. So what questions should we be asking ourselves when we're evaluating one of our positions? What are our probabilities? At this point, they couldn't seem to do anything decisive. We didn't know whether they were going this way, this way or this way. So when that happens, somewhere in here, you can start closing out the position because our evaluation or our probability factor is starting to diminish greatly. We don't know which way they're planning to go from here. And the whole point of using candlestick analysis is that we can see signals and patterns that give us much higher probabilities of knowing which direction a price is moving. Would you have sold around November 14th on cake? I don't know. I probably would have yeah, sold on this day when they gapped it down, and then I wouldn't buy it back until it comes back up through this level. Let's see, where was I? A gap up. What's our basic alert? Anytime we see a gap up in the overbought condition, what's the first thing we should start thinking? Where's our next sell signal? Or where's, remember, where most people buy exuberantly at the top, which is illustrated by a gap up, we can start taking profits. Where's our next buy? If it came back up through the highs, tells us they're moving away from the T-line, we're still in an uptrend. What we don't want to be doing is holding on, hoping that it's going to go this way, because again, at this point, we don't know whether it's going this way, or this way. We don't want to be holding on to stuff that looks like the probabilities are going against us, and then have something like this that takes back all the profits we had sat through for the last 2 weeks. So the benefit we have with candlestick analysis is the scanning technique is so simple for identifying when to be buying something that if we're sitting in something where the probabilities are getting a little bit iffy, just say to yourself, is this the best place to have our money, or should we take profits and go find another one where we can see the probabilities are much greater in our favor? So anytime I see something like this, even though I have a buy, what should we be expecting from that buy? That we're in an uptrend. After 4 or 5 days, they're not moving. That's telling you the bulls aren't there. Close out the position and go find something better. Remember, knowing what each signal represents, indecision, indecision, indecision. What do we want to see after a buy signal? We want to see decisively moving in a direction. If it's starting to fizzle out, close it out. Because at this point, we don't know whether they're going this way, or this way. If it becomes obvious they can't get up through this level, we want to get out well before this time frame. If I was long on this position, where do you think a logical stop loss would be? What simple scan do you to buy? Either the scanning software of Metastock or TC2000. And then once you set up your scans, all you have to do is refresh each day, and it provides you a supply of either good buy or good sell signals. Either the T-line, or if they opened up positive and came back down through the previous day's open, what would that tell us about the strength of this uptrend? It's not there up in the overbought condition. After gapping up in the overbought condition, and the probabilities again are gone against us. Sandman, I'll look at it when we go to live charts. I still use 1233. Can somebody that's using TOS as their scanning platform show KB what numbers to put in? Walter, I don't know. These are just illustrations to show when it's time to sell. Stochastics, 1233. So if I see something like this, shooting star, I don't need to wait for it to close below the T-line. I can put a sell stop just below the shooting star of this level, because if it goes in this direction, what's it telling us? Probabilities are that it's not going up through to new highs. If I can see a level that everybody else is watching, and I see a dark cloud, even though it hasn't closed below the T-line, what's it tell us about what everybody else was deciding at that resistance level? They were deciding to sell. We would have to be looking at it on the basis of, if we bought on this day, what were we expecting? We were expecting to break through that resistance level and going into a wave 3. The fact that we see a sell signal and a dark cloud signal, that tells us they aren't breaking through, close out the trade. If you can learn to close out the bad trades quickly, it becomes much more profitable, that you're getting out of situations that's not using up your time or your profitability, that you're getting out of the bad trades quickly, and you're moving that money into another good trade somewhere. Same thing on the short side. We could see when it was time to go short, your very best friend. When was it time to cover your short position? Well, we had a hammer signal on last week, but it didn't close above the T-line yet. Why would we start taking profits? Because we had a hammer signal and the markets were moving up strong. What would that imply? That this is probably where the bulls are starting to come in. Let's close out the position. Worst case scenario, we can always re-short it. AFRM, we were in short on this one because of the dumpling top, the blue ice failure, or the failure here at the 50, expecting it to go to the 200. But then we had a piercing signal, and the markets are trading positive. That told us in the oversold area, with stochastics coming up, this was probably a time to go ahead and start taking profits. Well, apps actually closed lower today. So now you have to watch that if they open this lower and start trading lower, now you might want to reshort it because it's got a bearish J-hook pattern setting up. Tamanio Bumbi. MACD is a lagging indicator. Now, if I can put it on my charts, I'm still using stochastics as my main criteria for whether we're in the overbought or oversold area, or whether there's a change. And if I can, sometimes I think on TC 2000, I can put MACD on as a histogram, but I don't use it for a trading factor. I just use it for just a little more fluff. But I don't use it as a main indicator. Would you buy APPS or AFM now? We bought on yesterday. What is today? Today's Thursday. Bought on yesterday. Now it closed back below the T-line, but it didn't do a sell signal. So what's our strategy at this point? Our strategy is it better open positive and trade positive to continue your bullish signal. If it opens lower, we close out the position. Whoops. What was the, I'll have to, oh, pshaw, I can't remember which one it was that did an evening star signal and closed below the T line. That you would have definitely closed out immediately. All right, so knowing what should happen based upon the signals and the T line, that kind of develops natural disciplines. Because if you eventually become comfortable with the fact that the signals and patterns and the T-line combination produce extremely high probability results, now you're not trying to second guess yourself. You're doing what the chart tells you. So whenever I look to buy something, whether long or short, I'm using it on the basis of a signal or pattern, and what is the expectations of those patterns, and where is the stop. Now, entry strategies are also a big aspect. As a matter of fact, this past weekend, we did a mini spotlight training on day trade and swing trade entries, the signals and pattern setups that produce extremely high probability results. That was an hour training session that we kind of figured would go to an hour and a half. I think it went to 2.5 hours. However, we just kind of looked at the low-hanging fruit, the best signals and patterns setups. On December 18th, we are going to be doing a full day training. Now, that's scheduled for 4 hours. You're lucky if we get out below 6 or 7 hours. But what this will do is go through the step-by-step application and recognition of what the high probability day trade setups are, which also correlates into which are the best swing trade entry setups. Now, I misquoted during the session because usually we charge $497 for non-members and $297 for members. But I forgot we were in the holiday special season. The actual price will be $297 for non-members and $197 for members. It will be recorded if you can't stay the whole day, yes. Now, I always want to illustrate our tricky marketing concept of if you're a non-member, you're probably better off. Darren, all right, but if you swing trade, it's still, this is just as applicable. But if you're a non-member, become a member for $97. Then you get the $197 price, which is the same price. The benefit you get is at least you have 30 days to see what the nightly recommendations are, and having access to the chat rooms, both the we got 2 chat rooms, the main room for identifying the best stock positions, and then we got an options room. And then you also get access for 30 days at least of our special trainings or extra trainings at night, whether they're for setting stop losses, your entry strategies, your scanning for profit taking, everything that would be benefited by the visual analysis of candlestick signals. So knowing when to take profits eliminates, or using candlestick analysis eliminates the fear factor of taking profits. And my fear factor was always, man, if I closed out this trade and it took off without me, boy, I would look so stupid. So at least now we know when to take profits and when to get back into a trade. Judy, that is something that is up to each individual. That is based upon your risk-reward nature. Some people want to trade the options that are going to expire at the end of this week. Other people might go out. I usually go out 2 or 3 weeks on my option trades. Yeah, so it's up to each individual as far as what their risk reward is. Obviously, the further out you go, the more you're going to pay for those options. But the less likely, if it reverses on you, that you're going to have a huge percentage loss. Okay, so with that, what am I supposed to do here? Go to live charts. So we notice what happened today in the market. The Dow didn't sell off. However, the NASDAQ sold off pretty hard, right back to the T-line. So what do we need to watch for? To see whether they're going to, the pre-market futures are telling us they're going to be opening positive and trading positive, or if they're opening lower. If they open lower, where do you think the NASDAQ is probably going to go to? Probably back down here. That means any long positions definitely need to stay above the T line. And if the markets open lower tomorrow with the NASDAQ trading lower and the Dow trading lower, where do you think the Dow is going to come back to? They're probably going to come. It's going to come back and test to see if the 50 and the T line is now going to act as a support. Okay, so let's take a gander here. I've got things all mixed in. Kind of going with the when to take profits aspect. Why does that not come up? ACHR. Well, for crying out loud. I don't know why that's not coming up. But here's one of the training we do, type of training we do on the 18th. Look where this stock went to today. Now, broke out right here, consolidated, and started back up. Where was a good entry on this trade? How old are these charts? Remember that joke a few weeks ago. Which joke was that? Did I tell a joke already? If I see something like this, either you can buy it on open for positive trading, or if it comes back up through this level, what's it telling us? The breakout bulls are still in control. Oh. Let's see. How old are these charts? Some of these charts are just illustrating from a couple weeks ago or a few weeks ago, but it was to illustrate when we got into trades and when we got out of trades. Most of these charts are within the last few days. What signal is that? Well, your breakout best friend, and then your best friend again. But what did this candle tell you right here? After trading flat for months, something new had happened. So you had a best friend gap up, opened lower. Then you had another best friend gap up. What did this all illustrate? There was a new dynamic that came into this chart. Now, this is what we call the RARE process, research analysis, reverse engineering. If we see a signal that's telling us there's lots of buying, we go and see what the news was that caused that signal. Could be a short squeeze. We don't care. We don't care what the reason is. So back to the question of when it's up here, if this stock just came from 6 to 36, what's our process at that point? We go to the 10-minute chart. And as soon as we saw a sell signal in this case, on the day that it moved up like this, that first sell signal, dark cloud, told us start taking profits. Because where do you think it was going to move to? Back to the T line. Now, here's something that we always point out, is what does this signal here in this move tell you? You finally reached a level where the equilibrium came into place between the bulls and the bears, and what's the normal result? It'll usually trade flat for quite a while from there. As you can see on the 10-minute chart, that's what it did. Oh, here's another one. Let me make this smaller. So we shorted Sophie because of a bearish J-hook pattern, but look what was happening down here. Hadn't actually closed above the T-line, but you had a buy signal, didn't close above the T-line. Looked like it was heading lower. Then you had another buy signal. Well, if one buy signal was an alert, two buy signals is telling you this is probably a place to start thinking about taking profits on your shorts because they were flattening out in the oversold area, starting to come up. That was a good place to start taking profits on your short. That was the same scenario over here on APPS. Bearish J-hook pattern, bullish Harami, Doji. It was time to start taking profits on the shorts because we could see this level right here was starting to act as support. Hold on to your individual ones until I tell Rick to do the double line. Does a dark cloud? No, it doesn't have to be the specifics of a dark cloud is whoops, 10-minute chart. Is that it opens above any of the previous day's trading and closes more than halfway down the previous day's candle. It could have just barely opened above the previous day's trading, but as long as it closes above or opens above and closes halfway down, that's your dark cloud. Is that what I did is on APPS? Yes. Now I forgot what I was. This is a CQG. I don't pay for live charts on CQG because I use other charts during the day. So because I don't pay for live charts, the charts are delayed 15 minutes, which after hours doesn't mean anything because there's no trading going on. Okay, so what is this one? BD. If you're long, when is it time to take profits? If you see a doji in the overbought condition, it doesn't have to close below the T-line. If it gaps down, starting your bearish best friend, that's where you want to close out immediately. You can always wait to see what it does at the T-line. Okay, so here's what we illustrated this past weekend as one of your best day trade entry points. INFN. Doji, spinning top, gap up through the T-line, did a doji. What's our doji rule? Doji rule is going to move in the direction how they open it after a doji. As soon as this opens positive, if you're a day trader or a swing trader, you can be buying immediately with much more confidence that it's going higher. How much higher do we think it's going on this day? Well, this is part of that sandwich. It's going to go up at least that much. So at least you can calculate what your day trade price movement might be. Now, we were still buying some at the end of the day because what are the twofold benefits of a doji sandwich? One, we know exactly when to buy, and two, we know there's probably going to be more upside from a doji sandwich. And how much upside do we expect? Well, if this is wave one, wave three should not have any problems getting through the 200 and going much higher. The 3T is, yes, still on the, none of the charts change. You have all the same indicators, the 200, the 50, the 34, the T-line, and the 3T line. Jake, most of the time you're already going to find that doji sandwich setup. That if I was doing my scan on Monday night, what did I see right here? I saw a best friend signal. I might get ready to buy on positive trading. Now, if I didn't buy it, what do I have? I've got the setup for a doji sandwich, so it's already there. And I don't know whether the doji sandwich formula is already on here. If you go down to that file folder in the very bottom right-hand corner of this page, it might already be in there. Not the question. When price is far away from the T line, you used to use the T3T line as a stop, but now seem to be dropping to the 10-minute chart. Yes. You can either use the 3T line as your criteria, or if you know you're way too far away from the T line on your daily chart, you can flip to your 10-minute chart. I'm usually flipping to the 10-minute chart to see when the first selling occurs. Now, I don't use the 10-minute chart here or here or here because you're not that far away from the T line. It's when you start moving excessively away from the T line that you become more cognizant of what your 10-minute chart is doing and what your 3T line is doing. Okay, so a lot of people say, well, when you see a reversal signal, can you be going from short to long? And the answer is no. If you see a reversal and you've been short, you cover your short, but you don't go long until it closes above the T line. Why did you choose the 10-minute chart for that? For that, which one, JC? During the day, are you looking at one day or several days? If they go, then go to the 10-minute chart. If I'm looking at something like this, I can see there's exuberance coming in, and now I'm moving too far away from the T line. That's when I go to the 10-minute chart. Why do I use the 10-minute versus the 5? Use whatever you are comfortable with. I use the 10-minute chart because it's relatively accurate. If I go to my 10-minute chart, I'll try to find one. Let's go back to this one. If I go to my 10-minute chart, I say, oh, they're gapping up. We're a good distance away from our 10-minute T line. Maybe it's time to start taking profits. What's my 5-minute chart look like? Oops, I'm starting to see a lot of indecision. All right, maybe with the combination analysis of my 5-minute and my 10-minute, that says I want to start taking some off the table. If you found some good bearish best friends, you just put them on your watch list. If the market opens lower tomorrow and starts trading lower, and some of those start activating, yeah, you can always start shorting those. Okay, want to get off the 10-minute chart? Let's see. So there's your doji sandwich. There's your gap up breakout going into wave 3. Now you're climbing up into the overbought area. You're still in wave 3, but when you're in the overbought area, what's your criteria at that point? Find a place that it shouldn't be trading, like maybe at that close or at today's open. Because if it came back down through there in the overbought area, what's that telling you? The bears have taken control. Whoops. AOSL. When you see that kicker type signal, even though it's up in this uptrend, what's it telling you? There's still a lot of strength. You're still going to be in an uptrend. MC, yes. Even if I'm day trading something, I want to know which general direction it's going. So if I'm day trading Apple and I see that it's going to be probably trading in an uptrend, I'm more oriented toward day trading Apple on an intraday basis. Yeah, I didn't see how they scored their 6 points or their 7 points. I want to be trading in the direction of what the daily chart is doing. Fastenal. There's your doji sandwich. There's your breakout. What can we conclude from this? Now, here's another element of the 3T line. But if you're trading above the 3T line, what's it tell you about your T-line? You're still well above your T-line. That just shows additional strength. Now, if this opened lower tomorrow, might close it out with the anticipation it's going to come back and test the T-line. What does this chart tell you? I mean, they gap this way down, but what is the ultimate analysis of this chart? They haven't been able to close this below the T-line. This is still in a 45 degree. Yeah, kind of your meeting line. But the fact that they couldn't close it below the T-line, maybe that was it. Is that the right one? ACHR. Whoops. ACHR. No, it's not coming up over here. I don't know why. Let me do this. I don't know why it's not coming up over on the other chart. But you can see on ACHR where your doji sandwich broke you out through the beginning of this fry pan bottom as well as the 50. So what is your basic criteria? Well, if you're trading this relatively active, I wouldn't want to see it trade back below today's low, because that would confirm the doji, and what would that be telling us? They're probably coming back to the T-line. If you're holding on to it a little bit longer, you got to still anticipate that if you're in a fry pan bottom, you still haven't closed below the T-line. Assume you're still in an uptrend. Lauren, I'll get to that. Remember, hang on to your individual ones until I tell Rick to do the double line. I'll probably get to most of these as we go along. Oh, we're on the wrong chart in the first place. Oscar, now that's a little bit dangerous. You can see the doji, best friend gap up. You're still above the T-line. Now, even though this looks ugly, the final criteria is it hasn't closed below the T-line. So what's your strategy on this one? It has to open positive and trade positive to stay in it. If it opens lower, close out the position. Now you've got probably a bearish J-hook pattern. These are ones that we've had positions on. Now there's your bearish Harami in wave 3. Very simple. To stay long, this one has to open positive and trade positive. If it opens lower, where do you think it's going to? Back to the T-line. Did they miss the extra point? Ah. AEHR is a perfect example too, that if this opened positive and was trading positive, good chart. But as soon as it came back down through the T-line and definitely closed here, you close it out because of that T-line rule. That if it closes below the T-line, the probabilities are extremely strong. You're still in a downtrend. And here is a good example of if you see a good chart, what do you need to see as far as confirmation. You need to see it open positive and trade positive. The fact that it opened lower and never traded back up positive again told you this isn't a good trade, stay out of the trade. So not only do the signals tell you when to get in, but the confirmation required also keeps you out of bad trades even though you've got a bullish signal. Okay, Apple. Did a doji up here in the overbought condition. Simple. Put a stop just below today's low. If it opens lower and trades lower, they're selling it off. John, depends on how aggressive you want to be. If I bought here, if it came back down through the open, what was that telling you? Well, just logic says if they open it positive and start trading positive from this point, who's in control? The bulls are in control. If they come back down through the open, the point where the bulls are in control, now who's in control? The bears are in control. You could stop out there. You could stop out at the T line, which would be basically at the previous day's open. Okay, Amazon is another example of if you were buying, if it closes below the T line, you close it out. Because the probabilities just went against you. Let's see, we'll take a look at Ford. The question was that the Ford did a bullish signal the other day. Your best friend's signal. It opened positive, but as soon as it opened positive, what did it do? It started selling off. So what was that telling you? The bulls weren't there. So if it sold off, where would have been a good place to buy? If it came back up through the open, that would confirm the signal. After it opened and failed, told you, you didn't want to be there. Now, in a situation like this, I probably wouldn't pay attention to Ford if I was going to buy it until it broke out through the congestion area. At what point do you have a best friend failure? As soon as it opened and started trading lower, it wasn't confirming. What do you want to see after a best friend signal? You want to see bullish confirmation. Well, if they open it and it starts trading lower, that's not bullish confirmation. Netflix. And back to that question of you see a buy signal, is it time to buy? Or if you were short and you covered your short and saw a buy signal, because you saw a buy signal, is it time to buy? The answer is no. You close out your short position, but you still need to see confirmation that they're going to trade up above the T line. And as you can see what happened today, they sold it back off. They couldn't get up above the T line. Tesla, same scenario. Let's see if we can get all these off of here. If you're short, you would have covered the short, but you wouldn't go long until you see a confirmed close above the T line. All right, here's some simple entry strategies. Here's a simple entry strategy. If you see a buy signal, and then they open it lower and trade back down, not good. But what confirms the buy signal? If they can bring it back up through the open of that candle, it tells you the strength is still there. That becomes an excellent buy point. Once Netflix got back up to the T-line and starts heading down again, couldn't you short it again, as that's the dominant trend? You know, the T-line has lower risk. You could, yes. So if this opened lower tomorrow, I'd be apt to be shorting it with my next watch to see what it does right here. But with the anticipation of wave 1, wave 2, failure at the T-line, wave 3, and if this is the magnitude of wave 1, where do you think a likely target could be for wave 3? Down here at the 200. Jim, use whatever you find is more effective. I have found that the 20-day moving average is only effective if there's a long, steady uptrend. The 34 works much better for me. Now, as you can see, these charts aren't that cluttered because the most important criteria is the signal itself. Everything else is just a confirming indicator. If you want to use the 20 to see if it's better than the 34, put the 20 on your chart and see how often it works effectively versus a 34 or any other support or resistance level. Remember, the most important criteria is the signal, where it's occurring in the trend, and the T-line. I could take everything else off this chart and keep the T-line, the stochastics, but most importantly are the signals. Anything else you add should be just creating better probabilities that you're witnessing where a support or resistance level is occurring. BHG. You can see where after a series of dojis, they broke up through the T-line, gapped up, pulled back. What's being confirmed? The fact that they aren't closing below the T-line. Medtronics, same scenario. As long as this stays above the T-line, there's a gap to fill right there. More than likely you're heading up as long as it stays above the T-line. And we mentioned INFN, your gap up, your doji sandwich, your expectation, wave 3. So the first target is you want to see what happens at the 200. If it goes through the 200, then you can expect that type of price move. Been keeping an eye on this one, haven't done anything with it, but you can see where you had a long-legged doji right here at the T-line starting up. This becomes a very high probability trade setup when you see that long-legged doji, and remember the doji rule. That it's going to move in the direction how they open after a doji. And this one is not coming up over here. So if I was going to day trade, look at my bullish left-right combo, gap up doji. If this opens positive tomorrow, as a day trader or a swing trader, you can be buying immediately with the probabilities that it's going to trade at least that high, which would also confirm our J-hook pattern. Jake, yes, sometimes when you look at a chart, it might already be too far away. This has already moved up 50% from from the $18 level to the $27 level. So this one's just more of an illustration of that you could have been buying down here with a high probability we're heading in this direction. So what's the best thing to do? Not chase after a stock that's already up 50%, but go try to find a chart that looks like this. And this is the whole point of showing you what happens on a chart after this, so that if you see something like this, you can say, well, I can be buying on positive trading with a much greater degree of confidence that I'm going to get positive results. I am AB. Inverted hammer Harami, bullish confirmation, doji sitting right here at the T line. What's this tell us? If this opens positive tomorrow, doji sandwich out of the T line, high probability it's going to be heading higher. Just because of the doji rule, which sets up your doji sandwich. You can see how this one kind of did a bullish flutter kicker after the breakout. What else did it tell us? The 200 was not acting as resistance. Why is that important to us? Because we can see that it did bullish Harami, right smack dab off the 50, gap up, doing a bullish flutter kicker type signal. Tells us there's strength, but what is everybody else watching? They're watching to see whether it's going to get up to the 200. That makes them a lot more confident to start buying. Let's see. Oh, why is this one not coming up? For crying out loud. XMTR. A few people are commenting on Alcoa today. Another doji sandwich, kind of breakout, and the breakout is kind of right here. So that's one you could be buying. Won't make a heck of a lot of money with it, percentage-wise, but it's moving in the right direction. How old are these charts? Darren, I don't understand the question. These are today's charts. That Yeah, I don't understand. We're looking at today's charts. Am I missing something here? ANET. There's your best friend, gap up off the 34. Kind of a doji sandwich. I would suspect they're coming back up to this level. Okay, there. Another. Morning star signal, best friend gap up, broke through the downtrend. Probabilities are that this one is heading higher. Now, open is a good example of just because you see a buy signal, it's not time to buy until they get up through the T line. So if I'd been short, I would have covered the short right there in the oversold area, and they were able to bring it back up through the previous day's open. showing strength. What is criteria for your selection of stock symbol now? Each night I can do a scan. Now, because I can recognize the signals and patterns, I do a very simple scan. I want to scan for the stocks that had the biggest percent price moves today, either to the upside or to the downside. And usually within the first 20 stocks, which takes approximately 45 to 50 seconds to go through, I'm going to come up with 3, 5, 7, 10 good reversal signals. Now, if you're not familiar with candlestick signals, you can go a little bit further. You can say, all right, I'm looking for stocks that did a doji today or a hammer today. You can put in those formulas. So I've got scans where I'm looking for dojis in the oversold area. All I have to do is refresh the charts, and I can go to that scan and see which ones did a doji in the oversold area to see whether I want to be ready to buy on positive trading tomorrow. I subscribed to the membership but did not get the username and password for login. Jan, email abraham@candlestickforum.com. Yeah, and check your spam folder. But let's see, Rick or Becky, can you type in Abraham's email? Same scenario. Here's if you were short and you were buying or covering your short because of the doji gap up, that's where you would have closed out your short position. Where would you have gone long? Not until it closed above the T line, which you can see they haven't done that yet. It's probably still heading down. Sava was the same scenario. If you were short, you would have covered right there on the positive open after a doji in the oversold area. Where would you have gone long? Not until it closed above the T line. Okay, oh, this is the one I was looking for. So you can see you had a bearish evening star type signal. Now remember, an evening star type signal works best if it's up in the overbought condition. But the fact that they did an evening star signal right here at the T line, what type of chart does that imply? Wave 1, wave 2, going into wave 3. So you could short this because it did a signal and closed below the T line. A little bit different than this one, because even though it closed below the T line, what was the sell signal? There wasn't a sell signal, it was just a down day. So now you wait to see if this was just a selling day in an uptrend, which means you definitely want to see this open positive tomorrow. CLSK would have covered a short position, but you can see what's happening. They've failed at this level. This means you can get ready to reshort. Jan, if you got it from the administration, that's Abraham. If you're not getting all that information you're supposed to, just email Abraham directly and he'll get right back to you. Same scenario here. It definitely needed to open positive and trade positive, but notice where it failed, right at the 50 and closed back below this level. Now you can think about going short again if this opens lower tomorrow. And Sophie, same scenario. This one can be shorted on weakness tomorrow. Okay. Good night, Bill. Any general questions on candlesticks? Remember, there's some very easy entry strategies that dramatically improve being in the right trade at the right time. And it can go as far as even even setting up for high probability day trades. D, there's a bunch of them. You've got the best friend signal. You've got the left-right combo. The best answer to that is we've got a training video on the top ranked signals and patterns. There's about 16 of them, 18. Go through those. Those are the ones that give you the strongest reversals. What is a 10-minute buy signal? Steve, I don't understand that question. The buy signals look just the same on a 10-minute chart as they do on a daily chart. DS, what to consider in case, doesn't matter whether it's a red doji or a green doji. The doji is illustrating indecision. Doesn't matter what color the body is. Pull up the individual ones. Do you wait till it drops below the T line before shorting? I would. Since you're that close to the T line and you've got a bearish signal telling you they're probably not heading up, I would wait to see whether they're going to come back and support off the T line or close below the T line. I would rather improve my probabilities of being in the right direction, even though it diminishes my profitability a little bit. I'd rather have the high probability trade. DS, what chart were you wanting to illustrate on that? Had a stick sandwich yesterday. Nah, not really. All you saw on this one is they couldn't get back up above, on Bank of America, they couldn't get up above the T line. Raymond, I would think, unless they open this positive and trade positive, they're probably going to pull back to test the T line. Does it matter at all that you get conflicting signals back to back? Yeah, that tells you that they don't know which way to take that price, so you probably want to stay away from it until you get better visual analysis. For day trading, what time frame do you use? 10, 5, 2, 1? That's all up to each individual DS as far as the activity or the speed of your trading. I used to trade the E-minis off the 1 minute, 3 minute, 10-minute chart combination. Right now I trade mostly off the 10-minute chart combination just because I don't have time to sit and watch for fast trading. So it figured that the downtrend was in progress on the daily chart on wheat. So I'm trading off the 10-minute chart. Make this a little bit more. First it moved up and then it traded back below. Closed it out, traded back below. So I use the 10-minute chart to trade intraday. Sandman, which one were you referring to? Do you ever use the depth chart? I don't even know what a depth chart is. You talking about level 2 or level 3? If I'm trading soybeans, cattle, yeah, use a level 2. It shows you how much volume is on the bid side and how much volume is on the ask side. Flutter kicker signal. Oh boy. Can anybody remember which one was a flutter kicker signal? If I come across one, I'll show it. But Howard, a flutter kicker signal is where, let's say you were in a downtrend and you had a dark candle, fairly decent sized dark candle. Then the next day they gap it up. LRKK, LRKK. They gap it up and do a doji above no, that's not one. They gap it up and do a doji at or above the previous day's dark candle. And that doji represents the indecision. So if they open positive after that doji, it's going to trade positive, the doji rule. Which means if you took out that little doji, the flutter, you essentially have a kicker signal. I'll try to remember which one. Well, for crying out loud. No, that's not one. I'm on a 10-minute chart. Thank you for that. Okay, let's try it again. Trying to find a bullish flutter kicker signal. Nothing there. Nothing there. All right. No, that's a kicker signal. I'll try to. Here's a bearish flutter kicker signal. Notice how you had a green candle, then a doji near the previous day's open, and they open it lower. If you took out this little flutter, you have a bearish kicker signal. No, that's a best friend signal. Hold on, I've got a list of them here. This is a bullish flutter kicker signal. Almost a bullish flutter. Dark candle, they gap it up, do a doji, then go the opposite direction. if you took out this little flutter, you essentially have a kicker signal. Toll Brothers, dark candle, they gap it up, do a doji, and open it positive. The doji rule says they're going to trade positive. If you took out that little flutter, you have a doji, a bullish flutter kicker signal. Yes, there's your bullish flutter kicker signal. So what told you this one failed? When they came back below the T line. It didn't, all right. What is the green line? The green line is the 3T line, which works in conjunction with the T line. It confirms, notice how, in this case, it didn't quite, or it was right at the T line, didn't confirm by going through. But it also works better. The further away you move from the T line, it also acts as a indicator, a little quicker indicator that you're going to come back to the T line. Okay, Rick, now you can do the double line. And in 2.8 seconds, do the next double line. Lithium, nothing. Probably would have covered the short position. Probably wouldn't be long or short. Or you could probably short this one on lower trading tomorrow. Lac, probably wouldn't be long or short. No direction. Apple, we did a doji up here in the overbought area. If you're long, you put your safety stop at today's low. The doji, best friend, gap up through this level. After your bullish harami doji sandwich, kind of a double doji sandwich, you just stay long until you see a sell signal. NVIDIA actually closed lower than the T line. If you were long this one, you close it out. It's not working. Yeah, the MACD again is a lagging indicator. I don't use it. I use more of the T line. Etsy failed to get above the T line. Another one that if I was short, I would cover the short. Now maybe you think about going short on weakness from here. Myrna never got up above the T line. If you're short, you stay short. If you've covered your short here, I'd be ready to go short if it comes back down through the 200. ISIG, well, you're now up in a higher risk area. If I was trading this one, it would definitely be off the 10-minute chart. The Russell 2000 back below the T line. Yes, so you got to figure they haven't started the uptrend yet. Kaput. That one you can stay long. Kind of a wee little island reversal. You can stay long on this one. Deva never got back up above the T line. Better short. Yeah, more, probably they're both shorts. You just have to see what the market does tomorrow and which one is selling off with a little bit more more strength. This one's not coming up over here. TLRY, another one that failed to get up above the T line. Get ready to go short on this one on weakness. SFIX. If you're short, you just stay short. Nothing showing any great strength yet. ESTC. Another one that failed to get up above the T line. Bearish Harami and failed to get the T line today. Already oversold. Do we short on weakness tomorrow? You can. You just watch to see what happens if it doesn't get back down to this area. Upstart. You can short this one on weakness. Again, this will all be based upon how the market's open tomorrow. This one, Sienna, you look for a 45 degree off of here. If I was long, I don't know why I would be, but if I was going to go long, I'd buy on positive trading and then use today's open as a stop. Unity, you could go short on this one with the expectation that wave 3 should take you down to the 200-day moving average. Whoops, didn't scroll. Free T-line. Gordon, I don't know what that means. Here's a failure to get up through this level. Get ready to go short. Walmart. Nothing yet. I would have covered the short position. I wouldn't be going long until they can get up through the T-line, and just be aware your magnitude of return isn't going to be all that spectacular. Boeing has to open positive to keep you above the T-line. PayPal has to open positive to stay long. If it opens lower, your downtrend's still in progress. And DOCS, another one that you can short on weakness. They never got back up above the T-line. Microsoft. Just That's pretty much a sideways chart. Get rid of that. If you're long, you can stay long as it stays above the T-line. If it closes below the T-line, you don't have any trend. Newell. Oh, another one where it has to open positive. If it opens lower, you can see the 50-day moving average is acting as resistance with a very indecisive doji day. ALZN has to open positive, break out through the 50. If it opens lower, you're stuck sideways. SVFA, after the bullish left-right combo, that one you can be buying. Just be aware that your magnitude of return is very skimpy. To go from here all the way up to here is going to be a 5% move. May not be that enticing. Roku, I'd short this one if it closes back below the T-line. SCCO, you can stay long on this. I think we did Dava. Dava, you can get ready to short this one on the failure of the 50 and the T-line. A-bus, stay long. I would use today's open, which would also coincide with the T-line as your stop. Stay long on this one. Just make sure your volume is good. DWAC backed off today. This one is an example of when you have a big move like this, if they open it positive or negative and then can't bring it up, close it out. You don't want to be in it until it comes back up through this level or this level. However, on something like this, as long as it doesn't close below the T-line, you can consider the J-hook or the fry pan is still in progress. Home Depot, nothing. If you're long, it has to open positive and trade positive tomorrow. Just not a very exciting one for percentage return. Chegg just barely stayed up above the T-line today. Well. No, maybe not. We closed this one out the other day and probably won't pay attention until it gets back up here. This one should have been closed out today. I think we did Myrna. I think we did Novidia. I think we did Sophie. Sophie, you can get ready to go short. Daku, we did. Daku, you can get ready to go. Whoops. Get ready to go. Whoops, am I looking at the right chart? Daku, nothing. Would not be trading this one. Didn't we do lithium? Are we repeating some of these? Lithium, if you're short, you can stay short. I don't know what lot is. Okay. Mara failed to get up above the T-line. Anticipate they can at least bring it back down to the 50. ZTS, stay long, but note where you are. You're right about at the breakout level, which tells you it has to open positive. If it opens lower, they're kind of failing at this level. CFVI, JC, as long as you're above the T-line, you're still in a 45 degree. That's about all you can really analyze on that chart. Lucid, stay short. Dix, close back below the T-line. If I'd bought this one today and it came back down here, I would have closed it out. ACAD, you stay long. LOTC, oh, gay, that's a lap. LAC, nothing on this chart. Matador, This one you can get ready to go short with it closing below the T-line. SE, another one you can get ready to go short on a lower open. Rivian, Nothing. If I'd been long yesterday, I would have closed it out today. There's no direction. The green line is the 3T line, the 3 exponential moving average. We did kaput. Fun. That one I would have closed out today with it closing just below the T line. Giving you a bearish harami, telling you that uptrend's not moving. Very, probably wouldn't be long or short. AUPH, another one that has to open positive to stay long, otherwise it's got a sideways. PayPal has to open positive to stay long. CVS we did. Just stay long, look for a 45 degree. Should I put Ford again? I wouldn't. Yeah, I don't think, nah. I wouldn't pay attention to Ford long or short. You can see what happened after that move. It's now sideways. I wouldn't be ready to buy up until here, wouldn't be ready to short until here, which means that's just a sideways chart. Whoops. NVIDIA looks like it's rolling over. Recent NVIDIA closes were above and below the T line, but there is proceeding various divergence. Now, George, if you're trading divergence, then you trade divergence. We're trading price. Price tells us they are below the T line. You should be out of this trade. Kaput needs to open positive. Oh, no, it's still trading positive. You stay long on this as long as it stays above the T line. We did PayPal. Walter, we don't, you can always trade something based upon what you think it's going to do. Oops. But right now, with it failing right here, I would suspect the next target is coming back down to the T line at least. I day trade futures. Yeah, right now I'm short. Short wheat. You can see how the failure has progressed. Jan, yeah, it's just Abraham there. He'll get back with you. He's got a newborn baby, so he may not be checking his emails this late at night. Well, I can't get this one to come up. The TBTC. Now, for some reason, it's not coming up over here. Land. All you can do is stay long as it stays above the T line, and obviously you want to see it get through this level. Best Buy, get ready to short this one on weakness. Yeah, could be a wave 3 to the downside. When do you decide the stock direction? The first 30 minutes? The first hour? More, it could be the first 90 seconds if everything's opening and the market's opening the same way. Otherwise, you watch to see what the market does, and we can do a entry strategy session in the members area here anytime you want to. Agnes, you can stay long now that it's reversed and doing kind of a scoop pattern. And it should be paying a relatively good dividend yield. Roblex, that's a nothing chart now. You're sideways. I'd be someplace else. Jan, if you want to stay in the chat room, just don't log out tonight. Unisys, you stay long as it stays above the T line. RATA, same scenario, but you don't want to see them close below the T line. AMAT also kind of failed right in this area, which tells you if this opens lower, if you're long, you're out of the trade. Vail, you can see that it's pulling back, but very indecisively. Now, if it opens lower tomorrow, more than likely they're coming back down to test the 50. Remember, anytime they break through a resistance level, they'll come back and test it to see if it's going to act as support. XPO definitely needs to open positive tomorrow. If it opens lower, obviously they failed at the 50. Close it out until it comes back up through the 50. You're getting that information by that little shooting star. Same scenario here on Futu. It has to open positive. If it opens lower tomorrow after the shooting star, they're not heading up, obviously. Edit, same scenario, has to open positive. Blue Apron should have been closed out today. You had a bearish engulfing signal, a doji, and as soon as it came back down to the low of the doji, which is also the T line, that's when you should have closed out the trade. It wasn't moving in the right direction. Mattel should have been closed out today, closing below the T line. Yeah, if you look at something and you don't know what it's doing, close out the trade and move on to something where you could get a better perspective of what it's doing. PubM, that's kind of a nothing chart. I'd be someplace else. UVXY. I would just stay short. Did a bullish Harami, but you're not in the oversold area. So that leaves a little bit of suspicion of whether this is ready to reverse. $34 EMA is the gray line, yes. You do have a doji potential setup, But again, that'll be a function of seeing what the pre-market futures are showing on the open tomorrow. Skechers, wouldn't be long or short this one. If I had gone long, I would have been out of it today. What is the tick size on wheat? $12.50 per tick. Bearish doji sandwich on Comcast. You can stay short on this one. The bigger the signal, the more compelling there's been a change of investor sentiment. ATO, just stay long, except you still need to break this downtrend. You still need to break this level. So you can stay long using the T-line as your stop. Party. Nothing wildly exciting. If you're long, use the T-line as your stop. MasterCard, stay long. But this has to open positive also. Angie's List, stay long as this stays above the T-line. AMBA, kind of a sideways chart. If I had been long, I would have closed it today with it closing back below yesterday's, or the doji low. Just not a very good looking chart at this point. All right, so it'll be important to see how they open the market tomorrow. If they open it lower, they're bringing the Dow back to test this level, which means they're selling off the NASDAQ also. AT&T wouldn't be long or short. That's a sideways nothing chart. Even when it does move, the percentage is so small. Do you list your favorite short or longs? Every day, Steve, I put out either 2 or 3 recommendations. If we think the market's trading bullish, we'll probably see 3 bullish recommendations. If it's going south, probably 3 bearish. If it's moving sideways, you might see 2 bullish, 2 bearish. And then once they execute, you're usually going to see that in the morning and afternoon comments. And then we usually kind of go over them in the chat room every day. So the ones that we saw tonight beginning were the ones that we'd already been in, kind of giving an evaluation of what to do with them or when to get out of them. Hot, you can get ready to short this one also. All right, everybody. I know you're all depressed. Steelers are down 23-0 at halftime. All right, we'll see everybody bright and early tomorrow morning. Where do you find the picks? You should be able to find them in the members area, in the stock picks area. And then you'll see them, so you can either analyze them before the market's open or the night before, depending on how early we get them up. And you'll see what to do with them usually in the morning comments. All right, everybody, have a good evening. We'll see you bright and early tomorrow morning.